It's one of the busiest weeks of the quarter with big tech earnings, a Fed meeting, and a shaky tech trade. Here to make sense of it all is Peter Anderson, founder and managing member of Anderson Capital Management. Peter, so good to have you. Thanks so much for being here.
Thanks for inviting me.
So, Peter, set the tone for us after a mostly lower July, sharply lower for tech. Are you bullish, neutral, or cautious?
Well, it depends on the sectors, right? I mean, I think what we're seeing right now is a total look back at AI infrastructure, build out, CapEx. So those things you can either be bullish or bearish on. And right now, I think that the market is tending to interpret this all fairly with some degree of paranoia, frankly, that earnings season is here. We're all watching to see what the CapEx schedules are going to be. And frankly, whatever those numbers are, one can take an optimistic tone or a pessimistic tone. I, myself, and our firm are fairly optimistic about the build out of AI.
So you're closely watching AI spending. What would tell you that all of this AI CapEx is actually producing measurable returns?
Exactly. That's what's happening now is, investors have been fairly patient, waiting, watching these huge CapEx devotions to spending on AI. And now I think the tide is turning slightly where investors are now starting to say, okay, we've been fairly patient, but when do we see the results? And we're starting to see those results trickle in, but it's at a frustrating level, Caroline. And I think if we have this earnings season with a little bit more tangible results, that can boost the rest of the year. But that remains to be seen. We're watching closely what the commentaries will be for this week's earnings, frankly.
So you say tangible results, but what is it specifically that you want to hear
Yeah.
from some of these big tech companies?
Well, Google has shown us a bit of hint with their web services. They have talked about that and they've said that their revenues from that component have increased and their margins are improving and their net income from that channel is improving. So if we can see more of that spirit throughout the other Mag 7, for instance, I think that will bolster confidence that this is going to pay off. But it is menacingly frustrating right now because I think we're not seeing it at the tangible level that we would like to see. Google is a great example, but we need more of that. And time is their enemy. As long as we keep waiting to see these results, that's more stress on the capital markets and particularly these specific stocks.
Well, Alphabet and Tesla have had a rough month. Alphabet's bouncing back a bit this week, but still down sharply on the month. We have Meta, Microsoft, Apple all higher in July heading into earnings. Amazon is lower. Do you think that big tech as a whole will be higher or lower after earnings?
It depends on the narratives. What I'm expecting is that these companies will most likely increase their CapEx spending, and a little bit of commentary on that. You have to get the right reason to increase the CapEx. The worst reasons, frankly, are what Meta said probably about a year ago. I don't know if you remember this, but their CEO said, we have to keep spending because our competitors are spending. That's not a good answer. A better answer would be, we need to keep spending because we are seeing the results. We're forecasting better results as a result of investing more in artificial intelligence. So how they explain why they're investing more is extremely important. And if it's just a game of my competitors are doing this, so I need to do this to keep up with the Joneses, so to speak, that is not a very viable investment strategy for them.
Okay. All right. So there's the earnings driver, but we also have the Fed. The Fed is expected to keep rates on hold tomorrow.
Yes.
Is the Fed still a market mover, or does this week's focus belong squarely on earnings?
Yeah, I think it's compounded actually. The Fed always seems to be a market mover. And now with the change of leadership, there is more intense focus and apprehension about how this leadership is going to, what the style is of communication. I've been in this business for over 30 years, and I have seen the transformation of the communication from Greenspan that hardly said anything, right? And I don't know if you recall reading this, but people used to look at the size of his briefcase when he was coming in for a meeting, because they would
Yeah.
say, well, if the briefcase is big, then there's a lot of information. He's probably going to make a change. If the briefcase is small, then it's business as usual. So we've gone from that then to a period of what I would call over communication, press conferences, every Fed official opining and not necessarily singing from the same hymnal, so to speak. They had all different opinions. That was kind of confusing. And now, what I think is going to happen with new leadership is we might roll back that communications to a level that I am actually looking forward to, which might mean, sadly, no press conferences, one statement, and not a lot of interviews by the regional officials, because that really confuses the market. That being said, the reason why this is so important is, of course, the Fed drives markets, and I don't see that any different now with the new leadership. In fact, I think there will be more focus on his first several meetings to see if we can get a grounding for his style and how he thinks macroscopically.
Okay. So,
Mm,
kind of TBD on that as well. I was taking a look at your
yeah.
notes. You're saying expect returns to be driven increasingly by stock selection rather than broad market exposure. Does that mean that the easy money from just buying the S&P 500 is
Yeah.
behind us?
I think so, and I think the easy money of just, if anything has an AI in it, let's just barrel into that. That I found that personally disturbing, that it would be such a gross call like that. And I'm far better and far more used to a stock picking environment. I think one of the byproducts of maybe this fatigue, this temporary fatigue, transient fatigue about AI, will be the wandering eye, so to speak, to other sectors. And I think that's a good thing. Some of these sectors have been grossly neglected and they've done very well. I mean, companies like United Rental Equipment, which we're going to talk about, I think, in a moment, that's a standard company that rents capital equipment. That has really been on the sidelines with a lot of other companies like that. And I think the time has come for these companies to actually have their day in the sun, like AI has for the past year and a half, frankly.
So we will get to your actual picks, but you talk
Mm,
about these sectors that have been neglected. I guess
yes.
let's start broad before digging down into those picks. What are those sectors that have been neglected and that you expect to lead this market in the second half of the year?
Well, I think the next great computing race, the starting gun has already been fired for that, but it hasn't been a lot of fanfare, and that's quantum computing. It is probably in the first inning, to coin a baseball phrase of 9 innings, first inning of development. But we think that that has a remarkable runway. And it is a sector now that has several companies, public companies, a handful of them, that I think are finally getting some attention. And by saying finally, I don't necessarily mean that the technology is all developed there. It's an exciting technology and it is still getting developed. But that's a sector that I think is exciting. It is certainly based on technology, but it's a very different argument for supporting compared to, say, artificial intelligence.
Okay, time for a quick break. Every few months, I like to do a financial check in. It's less about tracking every purchase and more about making sure I'm making progress toward my bigger financial goals. I spend a lot of time talking about markets and investing, but it's just as important to take a step back and look at the bigger picture. That's what led me to check out today's sponsor, Monarch. It pulls your bank accounts, brokerage accounts, credit cards, and other financial accounts into one clean dashboard so you can see your spending, investments, net worth, and recurring bills all in one place. One feature I like is that it automatically separates fixed expenses from more flexible spending, and the AI-powered insights explain what's changing in your finances based on your actual data. Just to be clear, this is not my actual data. This is demo mode. I do not drive a Tesla or a Jeep. Monarch is private and ad-free. You're the customer, not the product. It syncs with more than 13,000 financial institutions and works across both web and mobile. If you'd like a simpler way to get a clearer picture of your finances, check out Monarch using my link below and promo code STREET50. That's promo code STREET50.
Before we get to the next sector, dig into your quantum picks. What are the names? You say this is a stock picker's market, so give us your quantum picks.
Yeah, so our top pick is a company called Inflection. And, I was, as a sidebar, I need to tell you, I fully disclose that I was a physics major and I had a career in physics. So this material does come rather naturally to me. But you don't need to know all about the Heisenberg uncertainty principle and Hilbert spaces and Hermitian operators. This is all stuff that I learned in graduate school. What I can tell you is this: there are several ways of achieving quantum computing. And they're kind of in a horse race now. And the technology, just to simplify, there is one technology that requires ultra cold environments, near absolute zero, hundreds of degrees under zero. We don't like that technology because we think that that's difficult to maintain. Instead, we like what I would call room temperature quantum computing. That's very different, and that's far more achievable. And Inflection is involved in what I would call room temperature quantum computing. The technological challenge isn't as great as the super ultra cooled quantum computing that the competitors use. We think that this has a tremendous advantage and will probably be the leading quantum computing approach to solving the problem.
Okay, it's down about 40% year to date. So you would buy it here?
I would definitely buy it here. It is not for the faint of heart because there are competing arguments about how to achieve quantum computing. And many now are thinking the super cooled approach is a better way. But we think, as I said, the room temperature approach. And, you have to be patient with this. It's not exactly venture capital, but it is, as I said, on the first inning of a baseball game, you really don't know how things are going to play out. And I would say, thankfully, because I do know about this technology, I do have a higher confidence, I think, in the way to solve this problem, and this does seem to be the better way.
Okay. I see Blake Roeder is also on your list for quantum. That's BBCQ. And then kind of shifting gears, I know that you've also been interested in European defense. So tell us what's changed that's making you bullish on this space, especially as we think about the back half of the year.
Well, I've always thought this was a free gift to investors. With the current administration and the NATO involvement, it was clear very early on that the U.S. was going to take not as prominent a role in NATO. And there's always been complaints that the NATO members have not been paying their fair share, so to speak. And so there has been tremendous internal pressure by those participating European countries to spend more on their defense. And they have publicly stated that that's what they're going to do. They've also publicly implied that they are not going to rely on the United States as much. So what does that do? That puts tremendous pressure on their own building of defense infrastructure. And to us, it just seemed so obvious that these companies that were kind of dormant and not in the headlines now are going to be far more prominent in spending far more capital on building up their own infrastructure. And also add this: unfortunately, the global conflicts, in the Ukraine, in Iran, has added to the speculation that there will be more unrest. And if you're, Germany or France, for instance, I think you're watching the global conflicts and saying we really need to shore up our own defense. So to us, participating in several of these ADRs, American Depository Receipts, are stocks that you can buy that will allow you exposure to these European defense companies, is an easy call. And we've been fairly successful with these names since we owned them at the beginning of this year.
Okay, so those names are Rolls-Royce, RYCEY for the ADR, and then BAE Systems, BAESY. You know, both up double digits year to date. You've already been owning them. Would you buy them here, though?
I continue to hold them. And so, you know, as a portfolio manager, that is the equivalent answer of saying, yes, I would buy them. You know, every morning we wake up, we look at the holdings, and it's a brand new day. We don't really care about how well it's done for us in the past. We care about how well it will do for us in the future. And that is a resounding high confidence, yes, that those two names, we run a strategy called the Weathermark strategy, 15 stocks, highly concentrated, and those names are definitely in and will stay in until we find perhaps sell triggers, but they have not hit our sell triggers at all. And, you know, we spend less time fretting about valuation. We spend more time saying to ourselves, we have predetermined sell triggers, have these tripped them, and if they have not, everything seems stable and we will continue to hold and buy. So for instance, when we have new clients coming into the Weathermark strategy, we continue to buy those names, yes.
Okay, so is this a call just on the defense space, or would you say that international is a better bet overall than the U.S.?
Oh, yeah. A smart question, and I would say it is a call on the defense space. You know, Rolls-Royce, and that's not, most investors probably think of the exotic cars, the high-ended cars. This is the propulsion division. They build jet engines and things like that. Rolls-Royce has had a tremendous story of a turnaround, which we love. You know, the fact that the company was in kind of harder times, new management has come in, they've repaired the balance sheet now, and they're totally focused on growing the company. So that alone attracted our attention, the fact that it was what I would call a semi-turnaround. But then on top of this, the call for, it's more of a NATO play, I would say, than a play on Euro investing.
Okay, so of those 5 picks that you brought to us, Rolls-Royce, BAE, United Rentals, which you mentioned at the start, we have Blake Rotor and Inflection. If you could only buy one of them, which one would it be?
Yeah. Well, you know, of course, we never advocate that an investor just buy one stock. We are a somewhat of a fan of diversification, although we don't own more than 15 or a handful of stocks. But I would tell you that if you are a risk taker, you know, all these names have different strata of risks, right? And I would say the most aggressive name in there is Blake Rotor, because we haven't talked about that. Let me just add a little bit about that. That is also a quantum computing stock with the same kind of technology I mentioned, you know, room temperature computing. It is a SPAC, S-P-A-C. Your viewers probably are aware of what SPACs are. And it is going to de-SPAC, it's technically called, but it is going to buy a company that is a quantum computing company. It has already announced that. Why we're excited about that is the founder of this company that it's buying, the company is called Pascal. The founder, his name is Alain Aspect. He won the Nobel Prize several years ago for quantum computing. It was called quantum entanglement. So what better person can you get to form a company that has won a Nobel Prize in this area? And so I would say of the stocks, this is the most aggressive, but it also is, I think, the most insightful as a potential future when this company de-SPACs and it becomes a company probably named Pascal as the name of the quantum computing company. And I do think it has a long runway ahead of it.
Okay. And if you had to add a mega cap tech name in there to make it number 6, which would it be?
Yeah. Well, we own Amazon. We didn't talk about that, but Amazon is, you know, we're not known to be, as you might tell by the 5 stocks I've given you, you know, to be mainstream players in the everyday stocks. We don't find that is engaging enough for the kind of research we do. We try to find the next Nvidia, for instance. We owned Nvidia 10 years ago, actually, and when nobody knew what that was. So we like to think of these quantum computing stocks as kind of the next Nvidia in our track record history.
However, holding Nvidia for the past 10 years would have paid off
pretty
nicely. So are you still
yes.
okay? I was going to say, I hope you didn't sell it 10 years ago.
No, not 10 years ago. We held it for 10 years and we sold it about 2 years ago. But for us, Amazon is probably the more classic of the Mag 7, and it does have what we like, the two-pronged approach. It has a tremendous retail presence. That alone is of interest, but of course then it has its web services. It's a direct play, or should I say an indirect play into the whole AI field.
Okay. All right. I think this is a great time to pivot to our rapid fire round of this or that. It's quick questions, quick answers, no hedging. This is your first time playing with us. Are you ready, Peter?
Okay. I think so, yes. I haven't been practicing, so let's see how that goes.
Here we go. Tech earnings this week, upside, surprise, or disappointment?
I'm thinking that there will be a disappointment. And the reason the disappointment is not necessarily that they will beat their guidance, but there will be some negative interpretation about the CapEx spending because everybody's so nervous right now about that.
Earnings season bar, too high, too low, or just right?
Well, that is a long answer. I will tell you, it's just right.
No, there's
but
too high, too low, or just right.
Okay.
It doesn't have to be long.
Yeah, just right. And the reason for that is I think earnings are so, guided and so well communicated that unless you have a real slip, pretty much predictable. And that's a whole other segment we can talk about, my cynical comment about earnings and how companies manage those. But that's a topic for another time.
Okay. Chip sell-off, warning sign or temporary reset?
Temporary reset, because I do think AI, the demand for compute is infinite. And this is just people trying to rationalize and just do sanity checks on this. But I do think the demand for chips is non-ending, frankly.
AI CapEx, justified or overdone?
That is a tough one. I would say it is justified for now, and we will see if earnings don't. Remember at the beginning of the top of this interview, we were talking about will earnings justify that? But I am hopeful and optimistic that the companies are still on the right path, yes.
AI ROI, sooner or later?
No, sadly later. I think that it's still early. We're starting to see, as I mentioned with Google, some initial signs, but people will still have to be patient. And I think that's what's trying the market right now is the level of patience.
Broadening rally or narrow leadership?
Oh, definitely broadening rally, as we mentioned earlier, and I think that is very welcome. It will rationalize the field and will give companies like United Rental some airtime, some stage time that has been badly lacking, frankly.
Stay diversified or follow the winners?
Always stay diversified to a degree. Don't over-diversify, but certainly I think this is not a science. We can't predict with accuracy what's going to happen, and I think diversification does help us hedge that.
More upside from here, NASDAQ or Russell 2000?
Oh, definitely NASDAQ because it is the bellwether for all AI, all quantum computing, and I do think that there is more upside, but it's going to be a rough ride.
U.S. or international markets?
Oh, U.S. all the way, except, of course, what we mentioned earlier, but that was more of a NATO play, so U.S., yes.
Best sector bet for the second half of the year?
Well, I'm going to say quantum computing because we spent a good deal of time talking about that, but it's certainly quantum computing. Rough ride again, but we do think we're approaching the second inning now of that ninth inning.
One sector you'd avoid?
I think the energy sector, because that is it's being contested about if there's enough supply to build the data centers. And so on top of that, we've got the Iranian conflict that is driving commodity investors absolutely crazy. I mean, I'm sure your viewers have seen that the oil prices reflect every news headline about Iran. So that's not an investable sector, in my opinion, because it isn't based on fundamentals right now. It's totally headline driven.
One stock you'd sell or avoid right now?
Let's see if I can tell. Oh, okay. I have, yeah, classic. SpaceX. I would avoid. And in fact, I have another strategy that allows us to make bets on companies that we think are going to decline in stock price. And I have purchased long dated puts on SpaceX.
What's another stock you think will decline?
That's not enough, SpaceX.
I'm always looking for more, but no,
Yeah, I'm trying to think. I really don't have any other stocks in mind, in terms of negative. In fact, the strategy that I was talking about, referring to, that really has not many short positions in it right now because it is so hard to make a bet against a market that has such buoyancy.
And finally, one word or sentence to describe the market heading into August.
Impatient. And I'm saying that as a result of the CapEx. We have to remind ourselves this doesn't turn around in a day. You're going to see Amazon or Google, they're going to have these incremental changes, but we need to remind ourselves that, the AI isn't going to suddenly turn on to something. And I don't know if we have, are we out of time? Because I did want to mention one other example.
Sure, give us the example.
Okay, so I don't know if your viewers have read recently that a quantum computing company, DQuantum, has actually written a contract with AT&T. And the reason they've done this is AT&T has outage problems. When there are cell phones that go down or the networks go down across the country, it can be a disaster for them financially and operationally. And so they try to fix the network as quickly as they can. The old way they were doing this took them an hour to run the computer program. With this new quantum company, they were able to run the program, I think, with 15 seconds to solve the problem. The reason I bring this up is that is the kind of example we need on artificial intelligence, a tangible example where you have a case study that says a company like AT&T has used the product, resulted in a 15-second run versus a 60-minute run. That is a much better example, and I'm looking forward to when the Mag 7 companies will actually have case studies like that, because that will bolster everybody's confidence.
Interesting. All right, I have one final rapid fire question for you, because I'm not sure that I know the answer that you're going to give based on this interview. Market by year end, higher or lower from here?
I think the market will be higher. I think that we've had some great runs in the past several years, but I do think, given the support that, frankly, the administration has with some of these companies, and also the patience that I'm hoping investors will have, we will see improvements by the end of the year in some of these things that we've mentioned that I'm worried about not seeing the results yet.
Okay, so S&P 500 is up, call it 8% year to date. What do you think that number could look like?
Oh, I'm not a soothsayer, but let me just take a shot at that. We never predict markets like that, but I would tell you that 8% is probably a little bit under what I would expect currently. And so if we saw a handle of a 10 to 12% at the end of the year, I wouldn't be surprised at all.
We'll leave it there. Peter Anderson, founder and managing member of Anderson Capital Management. Really interesting insights. Thank you so much for your picks, too.
I enjoyed the conversation.
If you enjoyed this Street Talk, check out our full interview with Gene Munster. He thinks that AI is in the third inning and reveals which Mag 7 name he'd sell now.